Today, we're excited to welcome on to the podcast Billy Blount, who is an expert in the insurance space. He founded William Blount Insurance Advisors in 1994. And the thing we love about Billy is that he's really an educator at heart. And I love working with his team in particular on my own personal side of things, because he's educated my wife and I on how we can make the best decisions in home, auto, umbrella, and some of these other areas. So excited again to have you on the podcast. Welcome, Billy.
Thanks, Spencer. Glad to be here.
So today we get to dive into insurance and just kind of tap into your wisdom, your expertise over so many years in being able to provide wisdom to clients. And so we'll be talking about home and auto and umbrella insurances and kind of the insurance industry as a whole. And what we thought would be helpful here is we kind of dive in and think about the pain points, that clients will often have as they think about their insurance policies. And so as people come to you and maybe you've never sat down with them before, or as you're reviewing policies and they start out with something like, my homeowners and my auto insurance, it didn't do what I thought it would do. Where is the disconnect? Where are we typically missing if we think about general clients just not understanding this space as well?
Yeah, that's a great question, and I think it kind of goes to it's insurance policies are legal contracts with legal verbiage. They're not easy to read. They're not easy to understand, and it's just a bit of a painful process to try to sit down with one of these guys and try to work your way through them. It's just tough to pick out the pertinent details. So I think when folks are disappointed with the outcome of a claim that they may have, it's usually over probably just not having a good understanding of what the policy is supposed to do and what it's not supposed to do. For example, on homeowners, a lot of folks start thinking about that insurance policy as a maintenance agreement. It's not intended to be a maintenance agreement for fascia and things that just kind of get old and rot and wear out. That's not supposed to be covered by insurance policy. So people are surprised by things like that.
As you think about that kind of across some of these other policies as well, or thinking about the homeowners policy, what are the other terms, or what are the key pieces that sometimes clients we may walk through the verbiage with them, but they may not fully grasp. What are a handful of those different pieces with homeowners, with auto policies, even with umbrella insurance?
Yeah, sure. And of course, the answer is different for homeowners than it is auto, but I'll just kind of touch on them both. For homeowners, I think there's, number one, everyone is a bit seduced by the commercials, because every insurance company commercials, and that's every third commercial we see, by the way, they're always focused on price, how much you can save in 15 minutes and all of these. So they're very, very price oriented in the commercials. And that's understandable. It's expensive. We all hate writing our insurance checks. I mean, it's just a lot of money. And so insurance companies kind of know this, and I think they play on that just a little bit in the way that they advertise insurance. So the assumption is all insurance policies are alike. There's really not any difference. The only thing is, can you get the price down? And of course, price is very important. I'm not saying it's not, but I think the public generally thinks all insurance policies are exactly the same, and there's just a lot of difference from one policy to the other. That would be one thing, but it's also understandable, particularly right now in this day and time, because everyone's getting really, really large rate increases, whether it's home or auto. And that just ratchets up the angst, if you will, over how much it all costs. And so people focus on that even more, and understandably so. It's a huge factor. But there's just, I think, an attempt on the insurance industry part to try to make it seem like it's all the same, and all you need to worry about are the price. And so they talk about discounts, and I always kind of crack up. I'll watch a commercial by some insurance company, and they talk about it. You can get a multi-policy discount through us. Every insurance company has been offering that for decades, since the 70s. And so it's just kind of interesting, how the message they put across there, and some of the messaging folks kind of believe, because they believe that they don't have anything else to believe. But I do think that when customers are looking at different insurance options, keep in mind there are variances in policies, and why price absolutely certainly matters. It's very relevant. Everyone can get the price down if you carve some coverages out or decrease some amounts of coverages. And the truth is, a lot of the buying public probably doesn't even know when that happens.
Sure. Yeah. Well, that's great. So as we think about what's going to actually drive the cost, kind of those key features of an insurance policy, if you say, there's a whole lot of different levers that's going to come up with that price that we end up with there. What are the key drivers there? What are the key elements of the insurance policy that people need to understand, and maybe some of the ways that insurance companies will go as they choose to provide more or less insurance that's going to ultimately drive that price? What are those key pieces, say, on the homeowner side of things?
Yeah, on the homeowner side of things, the key piece, of course, is where the house is located, how old is the house, and what is the house constructed of. In other words, a log cabin sitting in a remote area with no fire hydrant or fire department access is going to cost a whole lot more money than a brick home that's in the city limits because of the materials of the house and where it's located and the accessibility of both the fire department and the fire hydrants. So those are big elements. But also, claims history certainly does play a role in both home and auto. The insurance industry is built on a couple of major principles, and one of them being that no matter what happens, there's the principle of large numbers, the law of large numbers. Sorry, I'll get that out in a minute. And that just means that if you pool enough premium together in a pool, you should have enough resources to pay the relatively few claims out of that pool. And the other thing is that the insurance company's whole rating structure is based on the idea that the past is the best predictor of the future. So if you have some claims activity, that is going to come into play and it will affect your rates. For homeowners in particular, we tell people, be judicious about what you want to file on your claims. If it's a large claim, of course, there's no question. But if it's something that's relatively close to your deductible, let us check first to see how many claims you have filed in the past 5 years. Because in the homeowners world, 3 claims in a 5-year period, it's a very tragic picture you get from a rate standpoint. So we remind folks of that, and we like to encourage our clients to actually call us if there's some question there so we can pull up their history and review it with them and let them make a little bit better informed decision. A lot of folks will want to call the insurance company direct. That's fine. They can certainly do that, but we like to help them navigate that idea of, is this a good claim to file or not, before they contact the insurance company.
Well, that's so helpful. And I think that's one of the reasons that, personally, that we moved insurance to you guys was being able to have someone that knows that space really well. And, frankly, there are some companies that it seems like, one insurance claim against you is not going to have quite as much impact, as maybe another company might hold it. And so you're not going to know that unless you're working with a specialist who's in that space day to day. So as we kind of think about the auto side of things, what are either key misconceptions that people might have, or also just what are the key things that drive, say, that price conversation, the key things that are insured, and what clients need to understand about that whole dynamic of the value that's being insured and how these companies go about this?
Yeah, great question. And on the autos, it's similar to the homeowners in that your claims record plays a large role. So think about it from an insurance company standpoint. They're underwriting the vehicle and the driver. Mm-hmm. So the driver's experience, lots of speeding tickets or a couple of at-fault accidents, they are going to pay a premium for a while because you just have to, because that's what the history shows. That's the best predictor of your future is going to be. But in addition to that, just the kind of vehicle it is. Of course, a Corvette's going to cost more to insure than something that's a Honda Accord. And the use of the vehicle. Do you drive it during work, to and from work? How far from work is home? Those kind of factors enter into it as well. I think the biggest misconception we see from folks on personal auto insurance is just not understanding what those crazy numbers mean. And, you look at your policy and 100, 300, 100, you're like, well, I don't even know what those mean. So often we find folks who will have a very thin amount of coverage for example, property damage liability, which would be what your insurance company would pay to fix another person's vehicle if you were at fault. And we frequently see a limit of like, say, $50,000 there or something. And so when we explain that means you only have $50,000 to fix another person's vehicle or truck or multiple vehicles if they're involved in the same accident, and you realize, wow, that's not a lot of coverage, and for $19 a year or something fairly something that's fairly easy to handle, you can double that amount of coverage, that sort of thing. But again, it kind of goes back to, well, no one wants to read those crazy policies because they're so difficult, and maybe somewhere along the way an agent just kind of hasn't taken the time to explain them, or maybe they've just kind of forgotten. But we find that to be a common error or situation that we try to help navigate through.
So, Billy, I think that's really a key factor that I think, especially when we see all those ads that you were talking about earlier, is when you see policies that are maybe only insuring for $50,000 of coverage protection, is that what they're doing? Are they reducing those liabilities that then the insurance company is viable for to get you the lowest price?
I think that does happen some. I think most agents are not, focusing and intentionally trying to do that, but usually it's a result of someone that's bought this policy with State Farm 20 years ago, and it's just kind of left it alone. And so it just continues to be renewed year after year with those same low limits. And no one's just taking the time to kind of stop and pause a moment and look at that and think through what's going on there.
Well, that does make a lot of sense. I mean, a $50,000 limit, 20 years ago was different than, today. But it's still, even back then, if we think about a multi-vehicle wreck or something like that, would seem to have some limitations on it, even then. So as we hear you, it sounds like the homeowner's policy, a lot of it has to do with home structure. Where's the home located? I presume the deductible also, is a driver a little bit with the home. Is that fair to say in terms of the pricing there?
For sure, the deductible is a way. By the way, studies show that over almost 80% of the public doesn't really quite understand what that word means. And so that word just means that if you have a claim, that's the part of claim that you will be responsible for. If I have a $10,000 claim and a $1,000 deductible, then the insurance company will pay $9,000, and the first $1,000 comes out of my pocket. And those have been around forever, and they're used as a means to try to just reduce the amount of low dollar claims and give the customer a little bit of control over the cost. Sometimes, frankly, we find folks are a little disappointed if they increase their deductible to $5,000, for example, on their home. I'd say $1,000 deductible is the most typical deductible we see. But a $5,000 deductible will reduce costs some, but it won't cut the premium in half. And some folks kind of think, oh, this is going to really make a big difference. It does make a difference, but probably not as big as a lot of folks think.
So it sounds like on the auto side of things, though, there's some different dynamics in here, and just knowing a little bit about that space, there's all kinds of different things that can be insured. Liability insurance is the biggest piece that really all of us have to have. But then there's also collision insurance and other ways that we can look at auto insurance. Can you kind of give us a big picture kind of view of the way that we can go about auto insurance, and maybe again unpack some of those key terms that we need to be aware of?
Yeah, for sure. So Tennessee is now, and has been for a number of years now, a compulsory liability state, which means it's to be compliant with the law, you must have liability coverage on your vehicle. Liability coverage just means that's your responsibility, that you're going to take care of the other person who may be involved in an accident, and if it happens to be your fault. But even despite the fact that we have that now as a law in Tennessee, statistics show that still almost 1/3 of the drivers in Tennessee are still uninsured. So there's a separate coverage on an auto policy called uninsured motorist liability. And so some folks believe that that's a little bit more of an option to choose or not choose that coverage. With the high number of uninsured drivers in the state of Tennessee, you would be hard pressed to convince me that that's not a good idea to purchase that coverage as well. But it is an optional coverage; it's not mandatory. On the autos themselves, so much difference in now and say 5 years ago. I think I read the other day that the average vehicle now has about 1,400 chips in it, and so one of the reasons for the big rate increases we're all experiencing in personal auto insurance is that claims are much more expensive to pay for now than they were just a few short years ago. And as we all know, having gone through this massive restructuring in the New World Order, chips are not as easy to get as they once were. And even though the supply is now starting to catch up a little bit, there still can be long delays at the body shop because you've got so many different things that they have to order. More chips means more parts. More parts means more labor costs. More labor costs, more diagnostic testing. I mean, just everything about even an auto claim. You think, well, this is an auto claim. I can get it fixed just like I've always done it. Well, yes, but it's a lot more complicated than it used to be. These are computerized machines, no matter what model you have to some degree or another. And all of that gets reflected in the cost of a claim. Therefore, that gets reflected in the cost of insurance. In 2022, this is, I think, nationwide, the auto insurance companies paid out about $1.12 for every dollar they took in auto insurance premiums. So it doesn't take a math genius to figure out that that can't go on for very long without some significant rate increases, and that's what we're all experiencing right now. Are we at the sort of the apex of that? We're hopeful that it won't be as bad in the coming years as it has been in the last 18 months or so.
So do you have a sense of is it the number of wrecks that are also increasing, or is it just the expense of the repairs that's driving that? Part of this question is kind of around that distracted driving. It feels like we're driving home these days, and honestly try to stay off I-40 because there's so many people that they're driving with their smartphone right here, and you say, well, this is going to be an accident at some point. So is it the number of wrecks? Is it just the wrecks are more expensive? Is it some of both? Do you have a sense of that?
Yeah. So the statistics show that the number of backing into the light pole in the parking lot, that is way down, as you would guess, because we have all kinds of sensors now, going back to those chips I referred to that tell us and ding and let us know. So those number of incidents are significantly down, but the overall accident frequency is up, and just because of what you described. How many times have you been sitting at the red light and the person in front of you is not going, and you see their head down, they're just looking at their phone or checking their message or whatever? That used to never happen. I don't think I bet I could count on one hand how many times I've used a horn in my entire life. But I find that just about every day I'm beeping my horn to let the person in front of me, hey, it's green, we can go now. Everyone, no matter what we try to do legislatively about that, everyone is still very focused on those phones, and that is coming up statistically in accidents all over the country, and that continues to increase year after year after year.
Yeah. So as we think about, this kind of third leg of insurance, the umbrella policies, this is an area that we really work with clients on. If there's one part of insurance that maybe some folks may have not heard of, it would be umbrella insurance. As you work with clients, how many folks are aware of umbrella insurance when you sit down? How often does it make sense, that you look here? Because again, even with say $250,000 in coverage in some areas, you get into a multi-car accident, or you have a client that gets into a wreck with some medical difficulties on the other side of things. It seems like that goes pretty quickly. What's your perspective on umbrella insurance, and how do you work with clients on that?
Yeah, and that our perspective on that has changed as the times have changed as well. In the olden days, we were like, well, if you have initials behind your name, or if you have a swimming pool, or teenagers who are driving, or a dog that may bite, you definitely need an umbrella policy. Nowadays, because there's so many more judgments of over $1 million in the court system, I think they've forgotten the exact number, but almost 50% more over the last 5 years than there were in the prior time. So the amount of large judgments is just continues to increase. And of course, that means that our recommendation over what someone probably needs has changed. So we're quicker to say an umbrella makes sense for a lot more folks than probably we used to be. If someone is retired and doesn't have that many assets and doesn't have the pool and teenagers in the house, all things, that can certainly mitigate their need for an umbrella. And we will just have that conversationally with our customers over what are their circumstances. But by and large, umbrellas are a good idea and probably a lot less expensive than what most people think. The umbrella policy simply gives you as a way for you to get more coverage. To the umbrella policy, your other insurance acts like a large deductible. So the cost of $1 million umbrella is far less than you're trying to buy $1 million on your primary policy. But oftentimes we'll just show that as an option and explain what the pros and cons of that are and let the customers make their choices there.
Mm-hmm. As you kind of think about that amount of the umbrella policy as kind of a base case, it sounds like it's, situational. One of the things that as we've talked with folks more and more, realize that, the number of judgments that's north of $1 million, like you said, has skyrocketed here. And it almost feels like just the attorney's fees and some of the other things that an umbrella policy can help with. $1 million is not what it used to be, in terms of that policy. So kind of a base case, oftentimes we'll be looking at, if clients have resources, something like $2 million, as an umbrella policy, maybe more, depending on, again, the assets that a client may want to insure. As you've kind of observed things, is that been kind of the path that y'all have gone there is kind of inching up there with the amount even that you would add to an umbrella policy?
Yeah, absolutely. Absolutely. And we'll show an option for $1 million umbrella, for example, and our $2 million umbrella. So you buy these policies in increments of $1 million. And so we'll often show options for higher limits as well. And the factors that cause the price on the umbrella depends on what assets the umbrella sits on top of, so to speak. If you can picture in your mind an umbrella sitting over top of something. So if a person has one or two vehicles and no boats or no RVs, it's really, $1 million umbrella could be $160 or $70. It's because it's just protecting fewer assets, so to speak. But if someone has multiple vehicles, expensive vehicles or boats and RVs, then the umbrella also provides coverage over those, the use of those things. And so the choice costs a little bit of money from an insurance standpoint. So an umbrella for a person who has those kinds of assets will cost more than someone who doesn't, for example.
Well, Billy, thank you so much for walking us through home, auto, and umbrella. In our next episode, we're going to talk through some more of the industry, what's happening in the industry, why rates are high, what's different between an independent and a captive agent. If you want to find Billy's company, you can go to williamblount.inc.com. We'll link a description in the show notes for you to reach out to their team if you have any questions. Clients, always feel free to reach out to us if you want us to review insurance policies. And with that, we will see you again next time. If you like these financial planning videos, please share it with a friend. And if you have questions, go to our website at SiriusRetirement.com. This content was provided by Retirement Planning Services. We are located in Knoxville, Tennessee. You can visit our website at SiriusRetirement.com. The information in this recording is intended for general educational and informational purposes only and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents. Advisory services offered through Retirement Planning Services, LLC.